Okay. Testing. 1, 2, 3. Testing 1, 2, 3. The rain in Spain falls mainly on the plains. Janssen Franste mainly in Japan. Good morning, everybody. It's the first Friday of the month, 8:05 in the AM NYC. Just a few minutes before we get to trade non-farm payrolls live, or shall I say the actual headline number coming out. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm that would like to earn your loyalty and respect and entice that through education. How about that? Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. I'd like to thank not just the crew at Traders Way or me via FX Bootcamp as well as Traders Way, FX Street. And I have had a relationship going on almost 20 years. And if you think about that, that's significantly longer than your last guru has traded Forex. Hang on, I'm looking over there because that's where I see the cam. Okay? I bet you your last guru hasn't even traded for the last 182 months. Well, today is the 182nd month of just this one webinar. And of course, I've been working with FX Street much longer than just these recent 182 months. You know, you're scratching your head and you're like, wait, that's more than 15 years. I know, right? Thank you to our moderator. Thank you for moderating so wonderfully. And then, of course, everybody here, thank you for so many different things. The hard work that you put into this, the good questions you ask, your positive energy and spirit. I appreciate that. You're good people. I like you in my life. Let's do something beautiful together, huh? So fair game today. I know a little bit about Forex. I know a little bit about economics. I know a little bit about technical analysis, having done this for a while. So please ask questions and get involved and, write things down. I always recommend writing things down. We all have different modes, right? But I believe writing things down covers a few different things. Cool. Nice hair day. Thank you. So again, I'm looking over there because that's where the chat is. And so I know this looks kind of strange. Maybe I'll move this over there. So today we're going to have non-farm payrolls. The recent ADP was just about 1 million. Before that, it was about 1 million. And last non-farm payrolls was surprisingly not 1 million, but not too surprising if you look at how the BLS does their seasonal adjustments. We also know we have social constraints. So even if Applebee's opened last month or even before that because of the, let's say the previous period, let's say previous to the last NFP, the waitress might have had an opportunity to go back to working at Applebee's, but a lot of things could have gotten in the way. One, she might have made just as much money or almost as much money just staying on unemployment. So maybe she's like, well, my job at Applebee's is difficult, so I'd rather just stay home and stay on unemployment. That could be true. Another one would be she's got a kid and the kid can't go to school. And she's like, well, I want to work at Applebee's, but my kid can't go to school because of COVID. They won't let them back. So she might want to go back and work at Applebee's, but she's got to now take care of this kid. Okay. 3, what's the third one? 3, she wants to go back to work. She can go back to work, but she doesn't feel comfortable interfacing with clientele at the restaurant until she has both vaccine shots. And maybe she has one and needs to wait 2 weeks before she can get the second one or something like that. Marina says, hey, if they only employ females at Applebee's, she'll never earn a lot. Oh, no. The manager is a man. And he makes lots of money. Right? That's that. So, welcome to America, Marina. So anyways, there's a lot that could have gotten, okay. But how about this new period? Well, now maybe she has both shots and has gone to work. Maybe the kid doesn't have to be at home all the time. Maybe, her unemployment benefits have run out. For many, the emergency unemployment benefits don't run out until September. So maybe that's when that happens. Okay. South Africa. What a beautiful country. Okay. Okay. So anyways, that is the kind of stuff that's in the way. So I think this non-farm payrolls will be better than last non-farm payrolls, but not significantly better in the sense like, is NFP going to hit 1 million? No, I think some of those structural issues will be less of an issue, but not solved either. So let's just say, how about 555,000? Okay. Now, I see a few people here asking about me guessing before non-farm payrolls. I don't guess. So, yeah, so that it's more like I'm trying to talk things through. Okay. Also, there will be continued seasonal adjustments that are strange because of last year things were bad, and so we're still kind of comparing this year versus last year versus 3 years ago. And when you mess around with models like that, they tend not to be accurate. See, models are accurate when you have normal plus normal plus normal divided by normal. It's very difficult to take a model and say normal, extremely unusual, moderately unusual, and then crunch out a number that would be expected. Okay? Okay. Danny Boy says he failed again, blew up his trading account, only a couple $100. There's no glory in that, so I have nothing to say, Danny Boy. Sorry, I don't have empathy. Not for you, just in general. Sorry, man. Cool. So anyways, that's where I'm coming from. There's still some structural challenges in the number. The base, there's sort of like base errors and stuff like that. So, everything will be fine macroeconomic wise. Headline, I don't know what the number is going to be, and most likely it won't be that good, not as much as what many might expect. Okay, ADP once again said 1 million, but I was surprised to learn that they use modeling and not just reporting. I don't know why ADP would need to do that, so I was a little bit surprised. And once again, if they have a normal model that produces their numbers but have unusual data, then the model sucks, right? Okay. All right, good. So ask questions and I will do my best to address them. I think we'll probably do euro dollar and euro yen for the headline number. Just to let you know, we're looking at the indices here. Dollar is strong versus everything. Yen is strong versus everything, right? And as full disclosure, I'm a bear on dollar and I'm a bear on yen, but they're both strong right now. Well, there's nothing I can do about that. It's not my fault. Okay. Now, there's a question here. So what happens if the number is less than expected? Well, there's sort of a behavioral finance thing going on here. So don't get caught on good is good and bad is bad, or think about it. What is the market worried about? The market is worried about inflation. Okay? And one of the things that's going to create inflation is higher wages. Okay? So it's kind of like, what will create that? Well, a shortage of jobs, right? I mean, a shortage of workers might do it. So a really bad number as far as hiring might push up wages. And I think that's interesting because many people do not have to go back to work until September. And they're probably sitting in their apartments going, well, why should I go to work now in the middle of summer where I can take the rest of summer off, relax, right? Grandpa Joe will take care of me. Cool. That might be not everybody, but it's some, and that would impact things. And maybe that pushes up wages, for example. But at the same time, if you don't have a job, you're not really inflationary in general. So here's what it comes down to. Nothing actually is likely to change the policy at the Fed, which we will learn not next week, but the week after. And that's what I care about most, Fed policy. And the second thing is import-export data. Does anyone want to take a guess why those are the two things I care about? So I will draw it. Domestic versus international. Okay? MV is equal to YP. C plus I plus G plus X minus M. Okay? And these two policies will tell me USD up or down. Okay? And both these things right now tell me US dollar down. Oh, the drawings don't show? You can't see anything? Really? You can't see this? No, you cannot. All right, interesting. Well, maybe I'll reboot the app. Okay. Wow, that sucks. Like, hang on. Task manager. Okay, booting it up again. All right. What? Yeah, it's not drawing. It's not displaying. Boo. That's going to make it difficult. Okay. So anyways, I got to keep my eye on the time. Go to here. Okay, so international versus domestic. One of the things I was talking about is the quantity of money. The second thing, right? The second thing I was talking about on an international basis is how we spend our money. How much money is there, and how does that impact the dollar? And how do we spend that money? I don't really care about the velocity of money per se. Okay. Okay. Maybe a notepad or something. Well, I could do here. Okay. So anyways, what I was saying is this. Okay, that's the domestic. This formula will tell me if I'm a dollar bull or a dollar bear. Okay? But then you subtract Y out of that. Okay? And Y is equal to C plus I plus G plus, I can't see, plus X minus M. Okay? MV equals YP, and Y is equal C plus I plus G plus X minus M. Okay? And both these things will tell me whether I'm a dollar bull or a dollar bear. Okay? RP wants to know NFP data. I think we already talked about that. Okay? Muthika Girls wants me to tell them what the Euro USD is going to do before we even know the headline number. Now, how would I know that? P is price, Revelations. M is the money supply, right? And V is velocity. Okay. So anyways, what you should be doing is, let me explain fundamental analysis, for example. Oh, you can't see the drawing tool. So difficult without being able to draw. What you need first, fundamental bias. Should gold go up or should gold not go up? Okay. If you don't have an opinion, you're not a professional. Why? People will come to you for your advice. That's what makes you a professional. And if your advice is, I have no idea, right? I don't know what the headline number is going to be because that would be a guess. How would I know what the U.S. government's going to come up with their fuzzy logic model of calling 5,000 businesses and then extrapolating that information into representing an economy of 350 million people. I don't know what they're going to do. I don't know what their model's like. I can tell you it's not very consistent. So it's more like I'm interested in the long-term trends. Okay? And where do we fit inside the long-term trend? What does that mean for the position inside of the business cycle? And what would the Fed do to manipulate the business cycle to get the outcome they desire? But what's euro dollar going to do after NFP? Who cares? Okay. But anyways, going back to this, looking at gold, you should have an opinion on whether gold is going to go up or down. If you thought up, you would say, well, we're at resistance and I can't buy at resistance. So you're done. And then you say, well, I'm a bull on gold, so I could buy it down here near 1750. Maybe I buy it down here, 1650, or maybe I just wait. Yeah. Okay. 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 But I can't guess on the headline number. But I can put together a thesis on macroeconomics, right? Anyways. So let's go over to, like, I guess euro dollar. Okay. Okay. Euro dollar's the most important one here. Okay. Let me update this just so I have a 50 pip stop. All right. So what do we have here? Failure to communicate. Okay. What do we have here? Well, if I were a bull, and I am, I have plan A up here, and I have plan B down there. Oh, you still can't see the stupid drawing tool. Oh, it's so habitual. I use it all the time. You can't see plan A and plan B. That just bugs. Plan A, plan B. Michael, check and see who Australia's leading trade partners are and check out their economic data. So anyways, we're about 90 seconds away from the headline number. We're using technical analysis and to confirm or deny the price and the time in which you would like to buy or sell. We are at or near support at this 121. No matter what happens, I think it would be foolish to sell. Why? My opinion? No, you're at support. One of the fundamental truths or universal truths of trading is if you're a bear, you don't sell at support. Okay, there's going to be some volatility, and I think you're going to get whipsawed today because I don't believe everybody agrees on how to interpret the data. If it comes out 1 million, how are people going to react? Probably both bullish and bearish over the next few hours. If it comes out 500,000, over the next few hours, it'll probably be bullish and bearish as well. So be very cautious and make sure you're the boss. You're buying at the prices you want. If you're a buyer, you only buy at support. And if you're a bear, you only sell at resistance. Use your technical analysis to confirm where the resistance is. Okay? So we got the volatility here. Spreads are wide because of the market's frozen. Okay. Do we have a number? I said 555. Well, I have to apologize. I'm 4,000 jobs off. I'm really sorry. Would you please forgive me? I don't feel well today. That's why I was late. So, I'm sorry. I'll do better next time. Yeah, a little off today. Must be tired. Yeah. What was the expected number? What was being reported as the number to expect? $650? All right. Yeah. 674, other people are saying. Okay. That's not far off. I think what they're doing is misinterpreting the ADP numbers. They're probably doing fine on the BLS numbers. Yeah. Gonna update my stop. Now I moved my stop 50% closer. Well, we're probably on the unemployment number. We're probably back into the fives, right? What are we, 5.8, 5.9? Did we drop from 6.1? I'm just going to check my other trades. I'm up 1,870 pips. Okay. Oh, Joseph says 5.9. Okay. Yeah, I thought maybe we'd get to 5.8. Again, sort of the seasonal adjustment mechanism that the Fed uses. Let's take a look at exotics, because this idea that the Fed... Man, I was on that again. Anyways, the Fed won't raise interest rates soon, and that's good for to emerging markets that have dollar-denominated debt. Okay, so like this rand trade benefited, right? I would argue that it was just a trade, and if you're doing the thing you do, then it's pretty simple. But I know it's not that simple because I was short here and ended up bailing on it again. Again, it's unbelievable. This one has been a bucking bronco for me. Anyone else trading South Africa? If I go to the 4-hour and zoom out, you'll see my other trade. Pretty cool. This is June. This is May. This is April. This is March. So February. Cool. 1,900 pips now. Okay. Nice. Thiago's got 11. Yeah, and you should, right? And you should. Let's go back to the indices and see how things have changed. Dollar's weakened, yen is weakened. That's good. Swiss franc, once again, very interesting. I almost kind of give up on Swissy now. Rand is recovering. Aussie's doing I8. Pound is fine. Euro getting crushed. This should change, though, I would think. Europe is doing quite well suddenly on their vaccinations. Several months ago, they were doing quite poorly. And there's a lot of hope for the European economy. I think mostly next year, not this year, but still. Okay. CAD, no, which is kind of interesting. A little bit disappointing. I'd like to look at CAD yen, even though yen is not weak yet. I'd like to look at it and see if there's a sign of it turning north again. Okay. So we'll take a look at kitty CAD yen. As you can see, I bought it off the bottom. I'll update my stop here. Okay. You see the bottom. Zoom in a little bit. Okay. So what I want to see now is probably, right, a battle here for a bit, and then it takes over. You guys think that? Sure, Sander. The issue is this is a dollar play, not a yen play, but the macro level is yen and dollar, but the news is more dollar, right? Revelations. Mr. Wayne, do you think this scalping trade could be a swing trade? Well, all my scalps are swing trades. So I would buy it in a scalping technique. Nurse it until I can reduce some risk by moving my stop and stuff, and then let it last. Like, for example, I'm a bull on CAD yen. So if I bought this, I'm not going to make 20 pips. I'm going to make 220 pips. Okay? So it's the same thing to me. And the reason I can do that is I only trade in the direction of my bias. Okay. So ultimately, of course, is the top of the range. Very cool. What else we got going? How's Kiwi recovering? Oh, wowzer. Wowzer. All right, so we're on our projected low for June, and it held all tickety-boo. Isn't that neat? That was our projected low for the month of June. I've been buying U.S. stocks throughout the month of May. And the last time I looked, even though I started buying in May, which means I bought some in the first week, some in the second week, some in the third week, some recently, but that portfolio is now up more than 10% total. Even though most of the trades, in fact, all of the trades are less than a month old, but by the end of May, it was up 10%. Which historically is a good year. Keefe caught the bottom. Look at you, man. Like a boss. Can we have go back to commodities, FT9? Okay. Yeah. Okay. Fib and enter? Well, this is more, to me, I would set this up like a role reversal, right? So I would look at that. What do you end up getting? A 382 and a 50%. Then you throw down this and say, well, what about that? Now you got your 618. So yeah, sure. Okay, if you prefer Fibonacci, do Fibonacci. Okay. Either way, guys, what you're saying is higher high projects a higher low. At what price would you buy? Okay. Mohammed says, hey, can we front run for next week? Yeah. Fridays are fine for that. Yeah. Typically, I front run on Thursdays, but not the Thursday before NFP. So yeah. Sure. Okay. Now, the interesting thing about a Fibonacci is you can use it as a guide and say the 382 predicts the 1618, which gets you to 79. My problem is that's so pathetically small. I'm not interested in that. Okay? I'm not a penny pincher. Okay? So instead, what could we do? My minimum target, by the way, you see I already have it listed, 1750. That's quite small too. That's not that great. Okay? Ultimately, we're on our way to 80. And I'll be honest with you, even that's pretty pathetic. So I could just not get out at all, meaning if I scalped non-farm payrolls today on Kiwi yen, I have so little confidence in Kiwi yen in the short run that if I took it, I'd probably hold it till the end of the year. Okay? And I'd play this role reversal. And just say, you know, I'm not interested. And even 200 pips is so small. That's not even 200 pips. Okay? You can do that in one day on the pound yen. On the Kiwi yen, it's not even clear we could do that this year, which is really funny, right? So I would just sort of like buy it, drop a stop, never look at it again. Because typically with the swing trade, I feel dissatisfied if there's less than 333 pips. And anybody in my swing trading group knows that to be true. Like if you get knocked out and you only get 180 pips on a trade, it's disappointing. You're like, oh man, that pullback came out of nowhere. What's up? Oh man. Oh, good, Joseph. Good. That's what I'd hope for. So that's good. So like if I look at this and the maximum potential over the next several months is 180 pips, it's barely worth the effort. I got other things I should be doing. But if I did take the shot, I'd probably just jam a stop, walk away, and try to forget it. Come back in 2025 and see what's up. Right? Okay. Cool. All right. So let's take a look at what we call the beast. Okay. And this is something that my swing trading group and I have set up. Okay. Okay. Now, this is the trade we have set up. Today is Friday. We made this trade plan on Thursday. Not yesterday. 8 days ago. That's the trade plan. Okay. Or if you want to say it's more like Friday, how about this? There's nothing to this. You can do this 9 different ways. Pivot points, you can clearly see. Price action, you clearly see. And just the idea of higher, high, higher, low, maybe use a Fibonacci. But this type of trade is not complicated. The issue is this trade's been active all week and it hasn't produced much. About 100 pips. But it's worth more than 100 pips. 54.5 going for 57.5. That's 300 pips. That's 1 week swing trade, which has more potential in it than Kiwi Yen has for the rest of the year. That's this week. Okay. And so this is up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. And our expectation is hopefully get some up today, right? Okay. One of the big disappointments recently has been the Aussie. You might see this as a bullish engulfing candle. So therefore, you could, if you were a bull, look to buy a dip. Okay. So the first thing is you take the top, drag it across, and you might buy it at 84.50. Hua? That's your 382 Fibonacci retracement. Okay. It's also a roll reversal, so it's straight out of price action. Okay. This doesn't tell you to be a bull. You should already know if you are a bull or you're not a bull. How many people between now and the end of the year, in the next 6 months, believe Aussie yen will be higher than we are right now? Anybody? Okay. Now, it's been disappointing lately. Okay. But if that is your opinion, aka bias, then this is what you're going to be playing today. Some degree of that. Okay. And you measure it any way you want because Fibonacci is subjective anyways. Okay. So you buy it around 50. That's Aussie yen. So we'll say we're bullish on a weekly point of view. Swing trading bullish. Oh. You mean we were already at support just as NFP was coming out? See, we knew this was a buy zone last week. Didn't know if we were going to get a buying opportunity, but technical analysis told us that this is a decent price in which you could consider buying for the rest of the week. Okay? Isn't that cool? Now, looking forward, the target is 85. I can't even see it. 85. Let's see on the 30-minute. 85.57. Okay, you're in at less than 84.57. Or maybe you're in at 84.50, whatever. 84.7 to 85, right? 84.57 to 85.57. So, you got a little swing trade here. You got a small fish to fry. So that's today and all of next week. You'll probably hit that on Wednesday or Thursday. Now, Mikhail says, hey, if you get that, you could hold it for the entire month. Well, let's check that out. So 84.5. Let's go to our template and say position trading bullish bias. What kind of guide would that give us? And now we're here. Once again, back in May, we said buying around 84.5. Really, it's 84.30. Buying around 84.30 is a trade, if it doesn't make a lower low than that, is a trade you could probably sit on for the rest of the month. That target is 86.50. So here's how you do this. You enter this week, okay? It makes a bit of a higher high. Then it comes down. Then next week, you get your second chance. It goes up to 85.50. Collapses into a new swing trade, which is a roll reversal here. And therefore, 2 weeks from now, you enter this and we get up around 86, 86.5, in which you should bail, or at least consider bailing. Why? You'll be at the Fed meeting. See, the most important thing this month was the Fed meeting. Now listen to this. Okay? Listen to this. I planned my vacation around the Fed meeting. Okay? Isn't that nice? So I know it's important. And this is something we talk about a lot. So this is today and next week, the week after, and then you'll be up here for the Fed meeting. Now, how many people here can confirm that I planned last year's mini vacation, like a week, it wasn't a big thing. How many people here can confirm that I literally started doing my daily webinars from the beach the Monday after the June Fed meeting? Which means as soon as the markets closed on Friday, the Friday after the Fed meeting back in June, I literally left town. And then on Monday, I show up for my regular Traders Way client webinar that I do every morning for Traders Way clients. And I told people, I'm like, hey, once the Fed meeting is over, you got summer. People are going to be on summer vacation. People are going to be hanging out on the beach and drinking margaritas, okay, and doing what hedge fund managers do best. Whining and dining, mostly whining. So anyways, that Monday, people logged into the webinar and I said, hey, I got my cup of coffee. I got my cigar. The beach is behind me. You can hear the roaring waves. You can see the sand and you can see the grass blowing in the gentle breeze. This is how the trader do. Yeah. So it's literally part of my life cycle. Fed meetings. Yes, I think I did have my 3-screen laptop. Yes. Yeah, a little windy. I bought these. Okay. So I bought these. See? And so I'll have wireless lavs. And they even have the little fuzzy thing, right? They have the little hamster on it. So I'll have that next time so that it won't be so windy. Lovely. So anyways, if you want to attend my daily live Forex trading webinar, please become a client. Even a demo client's fine. Open up a demo account at tradersway.com. Take you seconds. Then in your back office, there's a button that says live webinars. And you're in, just like that. Part of the cool kids club, tradersway.com. Why is it weakening? M times V is equal to Y times T. Okay, Greg? Plus or and X minus M. X being greater than M. No, sorry. M being greater than X. That's why. Now, I suppose you could do it this way too, thinking about it. If you remember your algebra, mv over y is equal to p. Oh, did I do it in the wrong spot? Oh, I did. That would work too, right? Come on, MT4. You could do it that way too, couldn't you? You got the money supply times the velocity of money divided by nominal GDP is equal to inflation. It's money supply times the velocity of money. Now, my macroeconomics course, what I teach you is we know that Y is constant over long periods of time. And I also share with you that V is constant over long periods of time. So we can remove those from the equation. But again, if you don't have the hours and hours up to that point, you won't fully understand it even if I just tell you. I think there's 10 lectures. So I think there's what 15 hours, do you think? Greg, it didn't miss. You have to understand, the average analyst simply was wrong. I think NFP came out exactly as it should have. Oh, right on, Emerald. Do. Right on, Gregors. Yeah, maybe you weren't here at the open, Greg. All right. So anyways, that's going along. Have I given back any? No, I'm about to hit 2,000 pips. Sounds really good, except I was up 2,200 pips on Thursday. No, sorry, on Wednesday. Wednesday night, I look at my phone. I'm like, oh, look, I'm up 2,200 pips. So here it is Friday, 48 hours later, and I don't even have 2,000 yet. I was knocked out of a lot of trades. Oy vey. So this is like only a small victory. All right. There's lots of people asking why. I'm putting together a macroeconomics course this summer. I don't think it'll be very expensive. Maybe you would like the 30 or 40 hour answer why. Okay, Ed? So I have 20 years of foreign exchange trading business. I've been licensed and registered in the United States, which means I've passed the Series 3 test. I also have a bachelor's degree in macroeconomics and a master's degree in financial management from Harvard. So I'll teach you everything I know this summer if you want to tune in. Maybe it costs you $300. That's the cost of a textbook at university, not the cost of a class. Okay. How many people are interested in something like that? Yeah. I've been doing a dry run to get the material pulled together and kind of explain myself out loud to a group of people. But when it's done, I'm going to redo it from scratch, having already run through it a few. There's only one lecture I want to edit. It was a little too long. Okay. Okay. So just stay close to me. Like I said, open up a demo account at Trader's Way. Come to my stuff. Get on my lists. You know, like I don't have a lot of lists and I don't really do any selling at all. Right? I know more than finance and banking lecturers. Yeah. In your opinion, would USD be even weaker if Trump still was in office? Well, Robin, what was Trump's major international economic policy? Trade wars. Trade wars close borders, and that strengthens the dollar. And we don't want a strong dollar. Okay. Cool. All right, so Brent's on Oscar Mike. So what you want to do is look at Noki, right? So let's go look at Norway. Norway. Where is it? Maybe it's over here. When you're all alone. Oh, look at our plan A, everybody. Plan A. Nice. Whoop, whoop. It did it. Look at our plan A. Haha. Cool. Michael, I think I'm going to structure it differently when I do the run through. One of my ideas is maybe to do a 21-day challenge over the summer. Revelation says, hey, but $300 in South Africa is crazy. But dude, look how strong the South African rand is compared to a year ago. Okay. Yeah. And I think that was the fee to come to my presentation in Johannesburg. And it was a 1-day event, wasn't it? Or was it 2 days? Maybe it was 2 days. But it wasn't 40 hours either. So, hey, Jagdish. Well, Jagdish, if the Indian central bank keeps buying gold, I would have to imagine it's up. Anyways, does anyone happen to remember when we did this? Was this yesterday during the swing trading meeting? Does anybody recall? Yeah, I covered it briefly earlier, Jagdish, as far as technicals. But fundamentally speaking, India's been buying up gold since about March to weaken the rupee because of the second shutdown. If it wasn't March, it was April. Whenever the second shutdown happened. Okay. Was it, right? Anyways, I thought this was from last night's swing trading. But, oh, you took notes and stuff. Okay. Well, my idea is like to make sure people are planning ahead properly. Okay. Cool, right? Is that pretty clear for most people? One of the hints here is you see these pink zones? Those are sell zones. They're not necessarily sells, but they're based on algorithms identifying places to sell. My plan A, okay, is based on selling right up in here, this 8.4. Now, here's the interesting thing. There's no buying setup anywhere on this chart. There's none. You'd have to go through life, not even consider buying. There isn't a consideration of that type of trade. There's sell or there's no sell. Plan A is sell. Okay, sell off of this gray area, 8.4. Okay. Plan B has to do with how you get back in on this short breach. Yeah, Marina, yeah. I'm not saying it's good. I'm saying it's better than it was when it was at 25, right? Yeah, I think when I was there it was 9. Right? So it went from 9 to $1 to 25 to $1. But I'm doing my best. I'm trying to help out. I've been buying South African Rand all year. I'm doing my contribution. Cool. No questions about that? All right. Lovely. Okay. I'm at a zone of threat toward my trade, so I'm going to move my stop to break even. I cannot lose money on this euro dollar. So I'm long at 19 and I'm long at 21. Cool. Cool, but Okay, let's take a look. Here we go. Not a good entry on Kitty CAD. I've had many. This is right, but this one is mine. Sounds like the Marines or something, right? This is my rifle. There are many like it, but this one is mine. Sure, Revelations. It doesn't take a lot of money to rent a Ferrari, right? Yeah, lira on a global scale is not a currency. The government's not even officially recognized as a real government, so. Mm-hmm. Crash in global markets due to higher interest rates might keep gold bullish. That's much too flamboyant of language, Jagdish. For example, you'll hear on TV people speak like that, and they'll say, higher interest rates are going to crash this U.S. stock market. Well, that doesn't make any sense. Right? That doesn't make any sense. Some stocks will be hurt. So NASDAQ maybe will come down harder than the S&P 500. Okay, for example. But I'm already buying bank stocks in anticipation of interest rates going up in 2 years and the beginning of yields going up, which has more to do with treasuries, by the end of the year because of the taper. And in situations like that, banks do better. So like this end of the world, it's the end of the world because the Fed's going to raise interest rates to 1%. Dude, that language is much too strong. It's definitely hyperbole. It's not helpful to any investor to think that way. It's more like if you actually think higher interest rates are coming. And by the way, what do you mean by interest rates? Fed funds interest rates or bond interest rates, right? And if so, like somebody's going to benefit and someone's going to be hurt. It's more like put together an investment thesis based on that. But that means nothing to me. There's a crash in the global markets. Like, it's just funny, right? It's the end of the world. This guy's going to fall. Like, oh, come on, dude. Settle down. Settle down. I know people on TV talk that way, but they're trying to sell you something. Okay, cool. So anyways, do. Well, I'm not going to talk about specific investment ideas, right, Michael? My job here isn't to give you my stock picks. But think about what a bank does. They borrow money from a client, a depositor. They borrow by paying them interest. Okay? So let's say they pay 1% interest on deposits. Of course, we know it's a lot less, but let's just pretend, right? But because the Fed fund rate rises, interest rates on everything go up, including mortgages. And because they make a spread on borrowing your money and paying you 1%, and then taking your money and lending it to your neighbor so that they can refi their mortgage, and they lend it to them at 4%, then there's a spread. Now, if interest rates continue to go up, mortgages could be 5%, but they might only be paying you, 1.5% in interest in your account. And the spread is widened. Okay, remember, banks make money for free. They take your money and they give it to other people and earn a profit for doing that. Okay, they're a financial intermediary, and they try to solve the asymmetric information challenge. So yeah, interest rates going up means they can probably get a better spread. For sure. Yeah, and that's what I mean, Michael. That's what I mean. And I'm not interested in beyond. Like, sometimes I'll mention things just because I'm trying to make a point in some other answer. Okay. So anyways, we got this moving in the right direction. Still just shy of 2,000 pips floating. 1989. $90, $91, $92. $97. Can we break 2,000 pips? 96, 97. 98. Yay, did you see it? 2,000 pips, baby. Yee! I'm only 200 pips below where I was 2 days ago. Oh my God. There we go. Someday, when you're all alone and your world is cold. Forex Algeria, how come you're logging in an hour something late and asking such a question? Alton made 50% more today thanks to my guidance and education. Well, thank you very much for saying that, Alton. Congratulations. Moet, you're a year late. Now. That's funny, but be polite. All right. Maybe we'll leave it. So, one of the things I'm doing here is I'm buying what I thought was support. Can you see? And I believe yesterday or the day before, this green zone was lower because it was all red. That's why I bought it low. It looks out of position, but it's not. The question is, do I have a checklist for longer term positions? You need to go to fxbootcamp.com and become a member of the community. Go through the training courses. You'll also be offered an opportunity to join our live trading group. That's the secret, right? Marketers will say 2,000 pips is full. Yeah. I'm only trying for 2% a month, right? And if you look at it, we're 6 months in, and yeah, that's about right. Nina's like, Wayne, I've learned so much from the class in these morning sessions. My trading has done 180. Awesome, Nina. Muy bien. Danny Boy says 2,000 pips is astonishingly good. Actually, most people, or let's say most, how about many people in my swing trading group have way more than that. Okay? Those are just example trades. Okay? It's not an example of a good portfolio. No, these are just setups that we took as I describe how to trade properly. But those that are working hard on their trading, they're doing significantly better. Okay? Roderick said, FX Bootcamp literally changed my life. Awesome. That's awesome. Cool. When am I going to start summer camp? I think what it's going to go down is I'm sending my wife and children to the beach for a week. And I'm going to stay here and work with you guys. Olin says up 15% in the last 2 months. Awesome. Raymond is up 22,000 pips last month. Right on, Ray. Revolutions made 700 pips. Is going to buy the course. Awesome. Aaron, how much do you have, Aaron? Mohit says, please come to Dubai. I miss Dubai for sure. And I have friends in Dubai that I need to meet up with. For sure. Plus, I have a new pair of the Billy Queen, and it seems like that's the place to wear them. Where I live, here in Simpleton, Georgia, people don't wear French bathing suits. But in Dubai, people look at the tag on your bathing suit. Oh, what are you wearing? Okay. TT's still got a euro bullish from April. That's good. Probably about 19, right? Very cool. Yeah, that's funny. When Alton grows up, he wants to be like Ray. Yeah, Ray's a good trader. He's a serious dude. Thiago says, hey, I'm getting married next year, and thanks FX Bootcamp for all you learned. So you're going to take your swing trading profits and buy your fiance's dream wedding? That's really cool. Boy, that must feel good, huh? Now she has to love you. Right? Yeah, I would really like to do a round the world trip, but I don't think the world's quite ready for that. But I'd like to fly all the way to Singapore, making stops along the way. And of course, flying back, you just keep going, right? You keep flying west. Make my way all the way home. Last stop, London, and then London to Atlanta and done, right? Wouldn't that be great? Maybe make like 7 stops and work my way around the world. And I'm thinking every February we should do an annual conference for Forex traders in the Caribbean. It'll just be a tax write-off for you. All right. So anyways, let's move on. Go back, check up on commodities. Okay. Once again, Brent's still crushing it. Oil's still crushing it. Okay. Yeah, and Raymond, you're probably having electrical power problems, which I think occurs this time of year. Right? I mean, I don't know. I think it'd be great if our South African team can earn enough money where they just maintain a vacation home in South Africa and they have an apartment in London. Right? You visit South Africa from time to time, but you got a nice flat in London or something. Yeah, and and London's probably not the right place either, because then you spend all your money living in London. You want to find someone nice but cheap. So let me explain this vertical line. Back in March, I trapped oil. We had a high, we had a significant low. Oil had dropped significantly, percentage-wise. And I asked people to do fundamental research on the energy complex. I said, there's a lot of things you could do here. You could look at the EIA reports, the IEA reports, the OPEC reports. You can look at the annual shareholder conferences for companies like Royal Dutch Shell and Exxon and British Petroleum. And they will also give you reports. What kind of reports? Well, current and future supply and current and future demand. Now, when you use the U.S. government reporting system, the Energy Information Agency, EIA. One of the things they give you is the 5-year historical average to supply and the standard deviation above and below, creating a range. And of course, they average everything out so you can see on average how much oil is available in March and the standard deviation above and below, so 2 standard deviations. The average level of oil in May and the 2 standard deviations, and the average level in June and 2 standard deviations in July, August, September, October, November, for the whole year. And then I said, so if you understand that, you understand the seasonality of the energy complex for WTI. And then you can look at where we are currently inside the 5-year average. Are we in the upper quartile of standard deviation? Are we in a lower? Are we at the mean? And what does this mean for supply or demand? And then more importantly, based on the trend of where we've been in the average, where do you see the average going in the future? Because you should be able to see the seasonality of supply and have an outlook for projected demand. And if you know this, you will be able to anticipate whether oil is going up or down. This was back in March. And then what I did was I drew this vertical line. And I said, this is going to be the critical day in March. March, April, and all of May. 3 months, but some of those months are big months. Okay, we're talking 10, 11, maybe 12 weeks in advance. I drew this vertical line. Can anybody confirm that? at least 10 weeks in advance. TT says yes. Kevin says yes. Danny Boy, yes. Combs, yes. Jean-Guy, yes. Yes. Okay, good. Why is it important now? On that day that I predicted 10, 11, 12 weeks in advance, on that day, price broke out of its range. On the day. On the day. Yeah, I don't like telling people because it doesn't mean anything to people, right, Big Perm? But if they did the work, they would understand the why. Now, that's kind of interesting, isn't it? Incredibly lucky. Mohammed, you need to manage your own risk and your own trades. Okay? So, as a swing trader, the stop losses can't be any easier as far as placing a stop loss. It's just mechanical. It's easy. Put it below support if you're a bull. If you're a bear, put it above resistance. Okay? When do you move? That's going to be for you. Yeah. I said you guys had to do the work, otherwise I'd take your phones and send you your rooms. Yeah, without Wi-Fi. Yeah, for a timeout. Take away your Wi-Fi and your phones. Okay. Sandeep says, how do I find a day trade? Why don't you take my day trading course at fxbootcamp.com and then take my swing trading course, and you'll learn how to day and swing trade. You'll also need to take the price action trading course, probably just the standard FX Bootcamp smart planning course. That would be probably a good one for you to do. Then once you're done all of those, you might want to take the fundamentals course. Yeah, and soon there's going to be a macroeconomics course. So holy smokes, Sandeep. How do you do it? You have to know how to trade. That's how you find it. Okay. It's the only way. You're going to need the knowledge. If I tell you, it's meaningless to both of us because you're not going to do it anyways. So it doesn't matter. It just doesn't matter. All right? Okay. But here's an interesting question. So I brought this up earlier today. Let's do it again. Not, it doesn't have to be this. Okay. How many people know what this means now, but a month ago you did not know what that means? Okay. Yeah, was it Maida that said she was having a conversation with her granddaughter who's in college learning economics, and they had a conversation about this and what it means? I think that was a great example. Okay? So, someone will ask me, Wayne, because of interest rates, the stock market's going to crash. Okay, stuff like that. I don't think that way. So someone might say, well, why am I bearish on the US dollar? And I'll say, oh, well, that's why. Okay. Now, why is this model not actually accurate? Because this is what's taught you in college, right? You're taught this in college. Every single economist in college learns that equation. But over the last 15 or 20 years, it has not been true. M times V is not equal to Y times P. Why is that? Why has that been the case? Why has the model proved wrong? Nope. Not the funding currency, not a reserve currency. Nope, that's not the answer. Change in behavior. Nope, not the answer. By the way, this is in my macroeconomics course. There is an answer. What is the correct answer? So far, you're getting it wrong. That's not how you'd say it, but based on that guess, Wang, you'd probably choose the right answer if I gave you a multiple choice. But can someone give me the better, more accurate answer? I'd give you half points. Okay, Zoo? Anybody else? Come on, guys. It's right out of the course. Trade. Global trade. Not seasonality, no. Global trade. Okay? So we have this, but we also have, and of course I already talked about this, but I'm trying to make that point so you understand. Okay? So in the United States, which one is bigger? M is bigger. So X is smaller than M. Okay? M, right? X minus M. So therefore, it's a negative number, meaning dollar negative. So this thing means, how shall I write this? Okay, X minus M, okay, if X is, I can't see my keyboard, everything's in the way. Where's the little, okay, if X is less than M, then that equals, I don't know how do you do this? About falling dollar. Let's do it that way. Okay? And then if we go to this, if that is at least somewhat true, okay? Not totally true, but somewhat true. Okay? And now, through my research of fundamental data, I can tell you M is greater than X, so the dollar should fall. And I believe the M will continue to be greater than X, so the dollar will continue to fall. And I believe this is somewhat true. Okay, I can adjust this. Okay, long-term Y, which is equal nominal GDP, is growing consistently over 50 years at 2.2% a year. Velocity over the last 50 years is typically 6, sometimes 7, sometimes 5, but on average is 6, so that is also constant. So I can tell you as the money supply goes up, the dollar will fall. That's what that says. Okay? Meaning, if the money supply goes up, prices go up, and what that means is you will need more dollars to buy the same thing, which means the purchasing power of each dollar has fallen. Okay? And then there's other things you can consider in this whole process. Okay? But that's where C plus I plus G matters, because that's the thing that binds all of this together. Okay? So C plus I plus G. What does that equal? What does that equal? Domestic GDP. So what we're isolating here is G, government purchases and spending. Has government spending gone up in the last 12 months, or has government spending gone down in 12 months? It's gone up. Okay? So, that means GDP goes up. Okay? Now, if government is spending money, that's somebody else's income. Okay? Because we also know something else, don't we? That would equal wages plus, okay, no, that would equal wages plus profits plus income plus interest, okay? Which is a fancy way of saying if G goes up, this stuff goes up. So you'll spend the money. So if government spending goes up, you'll either make profit on it, you'll lend the money to the government, you'll earn an interest. You're right. You'll have a job because of the government, or your company gets hired because of the government or something, but you have a wage. And then, of course, do you buy stuff at Walmart with your wage that is indirectly or directly supported by an increase in government spending? If yes, you're probably buying some crap from another country, which means you are actually making the dollar weak. An increase in G will lower the USD. Now, how did the government get money? Taxes? Yeah, okay. Did they borrow any money? The central government borrowed money. Did the central bank borrow money? No, they created money. So therefore, M went up. Therefore, price went up. Therefore, the dollar will go down. You understand the connection? And by the way, no, they didn't print it. That's what the Treasury does. Don't ever say that to me. The Treasury prints money. They did not print money. Okay. The central bank does not print money. It creates money. There's a difference. Okay? All right. So therefore, I look at things and say, dollar down. Well, it gets me all upset, Nelson, because when I read newspapers and stuff, they'd say that all the time. But never take financial advice from a journalist major. Right? So I'm approaching 2,100 pips. Cool. So nice to see a recovery, right? Nice to see a recovery here. We talked about Asia Pacific just last night. Pedro says I'm almost equal to the start of the week. I'm about where I was Wednesday. So nothing happened for me so far today. I am going to pull the plug at 10 a.m. So we have about 7.5 minutes left. If you got a burning, itchy, oozing question, let me know. Thank you, moderator, for being there for me today. I appreciate your professionalism and understanding. What happened on Wednesday? Obviously, people took profit before NFP. Well, that's an issue, though, isn't it, Rick? So that's why I focused on, is there a need to change? And also, Rick, I think it's interesting how a week ago everyone's like, oh man, I wish there was a pullback. Then they got a pullback and they're like, oh damn, I got a pullback? Well, forget it. Right? I'm not a bear anymore. You're like, dude, 18 hours worth of dollar strength shakes you out of a trade you said you'd be in all year. Come on, right? So I know the feeling, but at some point, right? At some point, you got to make your stand. But I know that feeling for sure. Hey, Damo, make sure you subscribe to the FX Street YouTube channel. Robin says, does the feeling ever go away? Well, this is why you need to position and swing trade more. Because what was my tone yesterday? Good, buy it. You wanted to pull back, now you got to pull back. So buy the damn pullback, right? Oh, right on. Right on, demo. Yeah, we're really lucky to have, FX Street. I mean, 20 years ago, it was the only thing for retail traders. So that's really cool, right? So like I said, if you visit tradersway.com, open up a demo account, in the back office, there's a button to my free daily webinars, which are usually about an hour and a half every day. But I'd like you to become part of the Traders Way community. And that's how you do it. Just open up a demo account. Okay. If you want to download MT4 or MT5, that's great. If you like my chart templates, they're available at metatraders.com. If you want education and training, that's fxbootcamp.com. Videos are where you start. You can join the live group. We do a lot of group work. So if you join the live group, it's not me on a pedestal barking orders at you. We do a lot of group work. So for example, I might put you in a group with 8 other people and you guys discuss what you think is the best currency pair to be trading in the next month. And once you guys finally agree on what and why, then you have to present a technical trade plan for the next 3-4 weeks to the group. Well, the whole group, not the group of 8, but to dozens and dozens of other traders. And you're like, we decided to trade the Aussie yen, and this is why fundamentally, and here's what the trade plan is. This is plan A. This is plan B. These are the targets. And then I might drill you for 10 minutes. Why'd you do this? Why'd you do that? What if this happened? What if that happened? That's what we do. Watch you watch yourself grow strong. That's what that's about. South Africa is still doing well. Let's go back to the... Oh, yeah, look at that, huh? Great. Oh, yeah, Thiago, I have one too, I believe, on Pissy. This is it, right? That's your trade, isn't it? This is Thiago's group. Came up with this trade. You see it? It's hard to see. I'm just trying to highlight it. So you can see we're long there. Now, I wouldn't call it an awesome trade as far as the outcome, right? But it's still alive and it's still profitable. My stop hasn't been moved. Yeah, I think it was 2 weeks ago, wasn't it? Yeah. Slow but alive. Yeah. Okay. Oh, great. Well, so anyways, I welcome everybody here to become a part of the Traders Way community, to become part of the FX Street community, to become part of the FX Bootcamp community. These resources are there to help. Okay. I've known FX Street and the leadership there for almost 20 years. I think that's pretty cool. I've been trading that whole time, so I've learned a few things. Took a sabbatical for 5 years and went back to university and got 2 degrees at Harvard so I could be a role model to my children. That's kind of cool. And then when it comes to Trader's Way, the part that that earned my trust was the Swiss National Bank when they lied to us many years ago. And they pulled the floor off the Euro Swiss franc. And FXCM went out of business that day. What, right? What was the other one that went out of business? Alpari, right? Alpari went out of business that day. And I contacted Trader's Way and I'm like, oh my God, are you guys okay? The world might be ending. This might go into a second financial crisis. Banks are failing. Brokers are failing. How are you doing? Because they're just a small broker out of the Caribbean. And they're like, we're totally fine. I'm like, well, why are you guys finding these huge brokers with hundreds of thousands of clients? Why are they going out of business? And the guys at Trader's Way said, well, we've executed all the trades exactly as our clients asked us to. So every time a client makes a trade, we match them to a liquidity partner and the trade gets entered into the interbanking system like a trader is supposed to. Or sorry, like a broker is supposed to. Apparently, the other brokers just might be trading against their clients, and that's why they went out of business, because the market not just crashed, there was no market on the other side. And the brokers were holding the bag of hundreds of millions of dollars of losses. Well, if they had entered the trade into the interbanking system, they wouldn't be holding anything and it wouldn't have impacted them. Yes, their clients might have had a losing trade, but that's to the client and they would have got margin called. So anyways, so on that day, they really earned my respect and my trust just because they were not negatively affected at all. And I said, you know what? I know currency traders. I'm talking to people on the phone right now. People are freaking out. You should send a press release and let everybody know you guys are okay. And they're like, that's a good idea. And I said, of course it's a good idea. So they sent out a press release and they're like, hey, we don't trade against our clients. Everything's cool. We're fine. Mohit says a friend of his lost 20 grand. Yeah. Okay. So anyways, thank you for being who you are. Thank you for your hard work. I must know 3/4 of the people in this webinar today. You're good people. I like you. You've earned my respect. The other 25% of people here today are new. Where have you been your whole life? I've been doing this for 25 years, or not 25, 20 years, every single day for 20 years. So I'm glad to finally run into you. You have some choices. Couple of choices would be like join FX Bootcamp if you like my attitude, my training, my knowledge, my whatever. So that's one thing you could do. Trader's Way is a place you can get a client or set up, become a client if you need a broker. More education's available at FX Street. They have dozens and dozens and dozens and dozens of people that provide education, but also FX Street has a lot of other resources available. Okay. So, obviously, thank you, FX Street. If you like my chart templates, that's at metatraders.com. I wrote a book a long time ago. It's pretty good. It's aight. You find it on Amazon. So that's about it. I mean, look, resources have been created over the last 20 years of me doing business. So, okay. Cool. So thank you, everybody. Have a wonderful week, wonderful weekend, profitable week next week. Maybe I'll see you at my Trader's Way live stream on Monday morning. Peace on earth. May the pips be with you. May our profits be above average. Take care, huh? Cheers.